All right, good evening, everyone. Welcome back to our last class for this time. Although this is not our last class, I'm just saying this reference to those who will be missing the recording instead because remaining classes will not be recorded, right? They are not going to be recorded. So those are for class people only. But for those who will be getting this recording for free, this is where we end. All right. So if you want to further your testing, at least from all what I've been doing so far, if you still don't get it clearly, go through them again, go through the videos again. Because with this alone, you can start killing the market, you can start making your little profits from the market consistently. If you keep on following all what we have been doing so far and what we are going to do specifically in this video, leave this video now and leave this class now and more. You are going to miss a lot. So today, we're having our last class where we put everything together, how to use what we have been learning ever since to start cashing trades of it and all that. So with that being said, let's get started. Now, as at the course of our intermediate class, we started with market structure. Then, okay, we started with explaining the whole concept of the model we're looking into, which is my model. This is his model. So we started with talking about it, saying that it's a model of advanced SMC. All right. And with that being said, make use of the smart money concept of it. Now, um, in explaining smart money concept, more or less in explaining the whole model of them, we make use of three main stuffs, which is the market structure, the market mechanics, and the liquidity. Now, remember these three main things because these are also the three things you will still be using in putting down. That being said, the first one I want to look into is market structure. That's why we took market structure first. If the knowledge of market structure is drawing, behind, please go and advance your knowledge. Go and watch those videos on market structure again to understand it very well. Market structure, it is the most important thing when it comes to so when it comes to putting together, market structure is the most important thing, all right? In the sense that you want to know the trend of the market. You don't want to trade against the trend, all right? You want to make sure that you are in line with the trend. So you want to know the trend of the market before you embark on that market. Before you can start doing anything, the first you want to know first is the trend of the market, the structure of that market. That's what you want to know first. And that's why we deal with market structure first. So at first, when you get into the market, you want to first of all apply your market structure. In which case you will start and looking for your break construction of it and all that, identifying the trend. Are we in a demand trend? Are we in a supply trend? If we're in a supply trend, then we know that you want to start looking for sales only. If we're in a demand trend, you know that you want to start looking for buys only. Right? So the market structure will be the one to provide you with your directional bias. Then after which, what you want to go into next is your market mechanics. Market mechanics is what you want to go into next. The market mechanics is the places that markets most likely react from. Right? That means now this market mechanics is divided into two. All right, it's divided into two. It's just a portion of it that is being done in market structure. Because in market structure, there was something I didn't relate to you guys because you guys have not understand market mechanics at that point in time. That's why I didn't relate it to you. There's always a destination when it comes to the market. You see this trend of a thing and all that, market is trending to the upside. Now, this trend will not just happen, or sharing the trend will not just happen. The sharing trend will only happen when markets have gotten to its destination of that previous trend. And because of that, it is now time for the market to change trend, or markets have gotten to a particular level. And that level is strong enough to push market to the other direction, to change the trend of that particular market. That's why we usually do. That's in such case, that's when we most likely have our market structure shifts, and then we start a new trend from there. Now, Those destinations are more or less your market mechanics or your liquidity. It might be after a sweep of liquidity or after or price will most likely be reacting from a market mechanics. Most of the times, price will most likely be reacting from a market mechanics. But your typical target should be liquidity. Liquidity is one of the most important we want to look into. It's one of, like I told you guys, one of the most important when it comes to this particular market. Liquidity is one of the most, in fact, the most important thing. After liquidity, before we then go over to market structure, because it's liquidity that you need in placing your trade. But when it comes to the full, like when it comes to placing your trade, your little trade, you need liquidity. But when it comes to the full this thing of that particular market, you need market structure. Take for instance, for me to place just one position over here, what I need majorly is liquidity. But for me to place multiple position, like this, what I need in this case is what? Is market structure. So know that, okay, yes, I need the bank trainer. For that case, for that reason, since price have not gotten to its destination, I can do what? I can keep on taking buys until market get to that its destination. But to take all those buys, that's where liquidity comes in play. Right? So this is why we most likely tend to look at for market structure first. So know the direction of the market more or less tagged as directional bias. Then after which, like I said, we want to look at for the destination, which is most likely your market mechanics that price most likely react from. So that we know that, okay, this is my target. I know that price will come here to come and react from this particular place. So my target should be, I can keep on taking this thing until price gets to that particular location. But you don't just jump right into the market. Remember, you're a smart money concept trader. You're an SMC trader. So for that reason, you don't just want to jump into the market at any given point in time. You want to enter the market when smart money guys want to enter, which simply means when liquidity wants to be taken out or after a sweep of liquidity. That's when you want to do what? You want to enter the market. Right? So with that being said, after everything, your market structure, your market mechanics, the next thing you want to look into next is your liquidity. Now, after your liquidity, you look for your points of entry. Your liquidity can be in any form which we have discussed before. It can be in the form of inducement, it can be in the form of trend line, it can be in the form of ranging liquidity. So those are the liquidity you want to look at for, first of all, before you enter the market. Because those are the liquidity your smart money guys will be after. So for you to follow them alongside when they want to make the main move, you need to do what? To look out for liquidity. Then after which, you look at for what? The point of interest that is closer to your liquidity, which most likely which is also your point of entry closer to liquidity. This is the main market mechanics. As you can see, it comes last. All right. Following this format, you can have an high probability trade. Now, I will give you guys some examples. I think I caught a trade recently. Now, what happened? In this particular trade, I know about the market structure. The market is currently in an uptrend. As for the destination, there is no market mechanics because this particular pair is in its all-time high. So there is no market mechanics that can do what? That can change the direction as of now, except the money transfer, or rather the flow of money in this particular market decides to like change negatively. That's when you most likely see that market will start dumping, thereby creating all these new highs of it and all that. But since there's nothing like that as of this point in time, this market is on an uptrend, a serious uptrend. There's no market mechanics to change it. So the destination is sure. Long the market in is all-time high. I will have even left this one until, okay, this was this all-time high, this particular place, which was this previous one here. You can see this was the all-time high. So what happened? I logged it until that all-time high, and then I locked up. Market gave me another opportunity to enter the market, but I said no, I will calm down and wait. That's why I missed this particular one here. And what happened? It came back again and I actually caught this next one here. So it's very much easy. First off, like I said, your market structure, identify your break of structure of thing and all that. Over here, we have our most trend break of structure. We have your liquidity break of structure. This is the liquidity. Now, price want to come to clear of this particular place. This is more or less a re-entry, right? This is more or less a re-entry for this particular move to come and give us a new break of structure here. So markets have already taken out this main liquidity and then have reacted from this market mechanics here, which is this breakout block. So applying the rules, let's go again. We have our what? Market structure, which is our break of structure here. So this is our break of structure, POS. Now, for the destination, remember, we don't have any destination as of now because market is in what is in its all-time highs. So at this point in time, you just want to keep looking for buys until there's a change in trend, right? So now, with that being said, our market mechanics destination is covered. Now we talk about liquidity. Where is the liquidity? Based on our classes on liquidity, complex liquidity that we talk about in inducement, we're meant to understand that inducement is the first pullback after a market structure shift or a break of structure. Now, this is our break of structure. This after the break of structure, market push this particular level and then pull back to this place. After pulling back to this place, thereby giving us our inducement by pushing to the upside. Remember the criteria for validating an inducement. It must give you a what? Either take out 50 or something percent of the pullback, which will be around here, or give you a double top, or give you a what? A break of structure. Like this one give us a break of structure to the upside, right? So coming back, this inducement is now valid. All right, this inducement is now valid. Now I'm going with the third one, which is the last this thing, the second market mechanics, the main market mechanics, is to look for the what? The point of interest that is closer to your inducement, right? Now, which point of interest is closer to my inducement? It's pretty much easy. This breakout block here, it is the one that is closer to my inducement. This is the inducement over here, and you can see that breakout block is the one closer to my inducement. What happened? I just mark it out, and what happened? Price reacted to it, giving us that sweet sniper. But I didn't enter the market at this level, right? I waited for market to actually give us that information. Now I didn't enter because I was not with this market. After I collect my money run from here, I decided to rest a little bit, give the market some time to cool off. So after which I saw this big move, then I know that yes, market is ready. I just need to wait for liquidity, and price did so by giving me this double bottom. Let me just call it a double bottom at that particular level. Right now, to get my points of interest, now price is giving me the double bottom, and I know for sure that this is the destination, which is this liquidity here, right? So with that being said, that means I can keep on longing the market until market gets to its what? To its destination. Now, my liquidity is here. My structure is valid. Normally, this is a re-entry. So market needs to come to this particular level. That market structure is okay and all that. This is the destination normally. So the next is liquidity. Like I said, we have this double bottom at this particular place, or rather inducement here, rather arranging liquidity. Then after which, our points of interest. The point of interest closer to my liquidity was this breaker block here. This one was way too close because, and as you can see, there was no fair value gap to validate it. That's why in Gloran, after all, price already reacted to it. That was why price pushed to this upside here. I don't want to catch that kind of move. Yes, there are many moves in the market, but I didn't want to catch this kind of move. If I wanted to catch that move, This one I'm using my TP at this particular level. I'm gonna give me a 1:4. But why will I be struggling to cash 1:4 when I have the opportunity to cash 1:21? So that's why I left this particular one. After I was not even with the market to actually see such. So I just ignored everything that happened here and waited patiently for market to come to my point of interest, which is the breaker block that is underneath the liquidity here. And what happened? Price came here, reacted to it, and head straight to TP. I think this trade was today. Yeah, it triggered around 3:30 p.m. and smashed TP just 30 minutes ago. That was 9:30. So that was how I took this trade. This is just how you can put everything together. Remember, first of all, you want to identify the structure of the market. You want to make sure that market is in a what? Is in an uptrend. And remember your market mechanics, your advanced market structure, I mean to say rather, you need your what? Your liquidity, right? So we want to wait for price to create a liquidity after a break of structure or a market structure shift. And after which, you do what? Let's say market was in a downtrend. And then market give us a break of a market structure shift to the upside. Now with this, I should be expecting my what? My liquidity to form. Perhaps I already have a target around this particular range. Let me say there's a liquidity here that I want price to come and take out. Now it might not be only liquidity, it might be also other block. Remember, excuse me. It might also be another block. Right? But all I know is that there's a target here. So I just wait for price to create my what? My liquidity. Right? Wait for your smart money guys to do their manipulation. Then after which confirm my liquidity. Perhaps might give me take out just 20% of the pullback, take out give us a double top, or take out the whole pullback, the whole high of 10, and then before coming back to come back to my point of interest 15. Then I will wait for market at this particular level, perhaps using another block or a breaker block at this particular level, the one that is closer to price, right? I want to make sure that it's the one closer to price. Now, it must not be closer to price directly. You know your criteria for picking out this thing before. I've already done them. Go back to your complex market mechanics and your advanced market mechanics. I think the video before this one, that was where we treated advanced market mechanics. Go back to advanced market mechanics and watch that video to understand this thing very well, because that will also help you in cashing high risk to reward trade. Take for instance 1:100, 1:40, 1:30, all those ones. If you want to start cashing all those high risk to reward trade, go back to that video. So over here we have our liquidity, which will be inducement in this case. And what will happen? Price will then come back. Now, at this case, this is where I want to position my trade. With my SL resting below the other block. Remember, the other block is not is just because you refer another block does not mean that price is going to, or you refer another block or breaker block does not mean that price is just going to respect it directly. No, the reason why all these places hold is because smart money guys most likely be positioned there. That does not mean that we'll be positioned there at every given point in time. That does not mean that they are accurately positioned on that particular level. No. All right. So you want to make sure that your SL is a little bit below that particular place. If I have to go with mine now, now you can see that I used a breaker block here. This was supposed to be my usual SL. If I use just the other block of the 10, the breaker block, don't give me 1:24. But I said no, I gave it a little chance. And that's why I caught the 1:21 instead of 1:24. I give it a little chance to breathe in case of anything. Our purpose and aim here is to make profit, not to prove to market that we are stronger than it. But for me, I like proving to the market, sha. But if you go prove to the market, now your money in that market will you still start with. So then and first before you go start to the prove to the market. So that's for that. My target will most likely be here. And then what will happen next? Price will then come from here, tap into our entry, and then boom to the upside. Now, peradventure, after the break of structure at this particular level, market then gave us another chance again. It don't get to its destination before giving us this other chance. Perhaps let's say it gave us this is a ranging market, right? So after the range of a thing, can literally react from this particular zone and push to the upside. Now, I can also take this trade as well, with this one being my liquidity, this range. And my point of interest will be the one closer to this thing, so price. So I can also do what? Take this trade in particular. And my target should be here. Then after which, let me say market still failed to react, so its main destination of a thing. And this is in a scenario of a trend line liquidity. So now in this case, let me say before getting to its destination, let me say that this is the final one. In this case, this will then be our trend line liquidity here, and here being the origin. Then there will be our points of interest, this breaker block here. Now I will show you guys an example of this particular trade here. This particular pattern you see here is one of the advanced liquidity. Remember, I didn't make any video on advanced liquidity. That is a private class, all right? It's not something that we'll be giving out just like that. No, it's a private class. So if you want to know about advanced liquidity, go and register for your own mentorship. So this for this, right? So these are the various ways that you can use to like actually start killing the market after this. And you can put anything together. So far you have your market, this thing, your market structure first of all. You want to see your break of structures first before you start making plans and all that. And after your break of structure, before can then move on to look out for your liquidity. Your liquidity will be either in the form of inducement, trend line, or ranging liquidity. Then after which, remember before that, you also want to get your destination in place because you need a target, and that's where you'll be targeting. All right. Then after which, price will most likely pull back from that will most likely trigger a change in trend. So you want to keep on selling, buying until price gets to that particular level. So after identifying that place, before you can then go and find your liquidity, then you look for the point of futures closer to your liquidity. You look for your exit liquidity of a thing. Your exit liquidity will be how price approach your liquidity. Take for instance, if I was to take this trade, my main purpose will be to close this particular range of liquidity at the top side. This one might even be an inducement of just have it in mind that your liquidity will also be your exit liquidity. Will also remember in market mechanics and in liquidity concept, we're meant to understand that markets move towards liquidity. Now liquidity is they move markets. take out one liquidity and move to go and take out the other liquidity. So your liquidity should be the opposite. If this is my sell side liquidity that price is going to take out to trigger my entry, then this will be the corresponding buy side liquidity that I'm expecting price to come and take out. Yes, I know that this is the destination. That does not mean that I will raise my TP and come and place it here. No, I won't do such. All right, I won't do such because I know that market moves in a liquidity app format. Takes one liquidity and takes the corresponding liquidity. But all I know is that this is the main destination. That does not mean I'm going to target here. No. This is the difference between normal SMC and advanced SMC. Advanced SMC, we focus on liquidity. All right. So this for that. Now I'll go over to give you guys a preview of my, let me say a little bit of trade recap of some trade I've taken over the time. I think let's see. Okay. Now over here, what happened? You can see the sweep of liquidity at the bottom, which is one of the criteria for validating your point of interest. And then you can see what happened next. This was the last high before this thing, before price pushed the upside. So we can consider it as a market structure shift, and this the pullback after the market structure shift, which should then be the inducement, right? As for the target, like I told you guys, this coin was heading towards its all-time high. So that was for that. And what happened? Price came back, took out the liquidity, tap it to my point of interest. I paid the point of interest here, which is this other block here. So tap into it and boom, to my TP. Now for this one as well, this was the liquidity. First of all, market is in an uptrend already. So market was this liquidity, market the liquidity. I just look for the point of interest closer to liquidity, which is this breaker block here. And market came back down, tap into the breaker block and push to the upside. The same thing here as well. This was our market structure shift at this particular level. What happened? Market was this liquidity here, which was a ranging liquidity. Price came back, took it out, tap into our breaker block here, and pushed to go and smash my take profit. Now, also, I think, okay, the next one should be SAGUSD. All right, so this is a trade I took on SAGUSD, which is silver. So first of all, market was around, I think I shared this trade with some people, and some of them actually took the trade share. But for those that did not take it, sorry for you. So this is market was in an uptrend. Silver was giving us new all-time highs and all that, but market started reacting to the downside. Now, excuse me. Now the daily time frame, markets have reacted from the fair value gap, and not just have been reacting from the fair value gap. In the lower time frame, I saw that markets have taken out this liquidity. All right. Now these 3 circles here, don't ask questions regarding it. It's an advanced stuff. If you want to ask questions, that should be in an advanced class. All right. That 3 circle indicates a lot of things. So I will leave that one first. Forget about that one. But regardless, this is our market structure shift here. This is our break of structure. After the break of structure, what happened? This is the pullback. After that break of structure, so this pullback was then my liquidity. And what happened? I marked out this breaker block here. Price pushed to the upside, came back, reacted from the breaker block, and then remember the main target was here. This was the destination. What happened? Price pushed to go and clear off that destination. Now I also use other concepts as well when it comes to the destination of a thing, and I think in this particular trade I use CROT, and that was why my take profits was not here. Initially, this was my take profit. My first take profit was around this particular level. Yeah, because it was around there when I was making this analysis. That was when price was. That was in 1:12. And the main TP was in 1:23. If I've taken this trade with $100, I should be leaving the market with $2,300. So that's for that. Okay, I think this should be enough. This should be enough. We are trying to see if we can make this video as short as possible, because long video, people aren't that attracted to long video. They tend to feel like the video is too long with another. So let's try to make this video short as possible. So that will be all for our class. Now this will be the end of anything recorded class. thing. As for the other class, they will not be recorded, right? That's when we talk about advanced stuffs, advanced order block, advanced breaker block, many other things as well, advanced liquidity and all that, anything advanced. But with whatever we have discussed so far, you can start using it to do what? To kill the market very well. All right. As you can see, now still those things now you still do it to take kill the market for this particular place. And not much this trade actually gave to me. So that's for that. Anyone have any question regarding on what we did so far? You guys understand? Please, you can turn on your mic now.
Yes, I understand.
Yeah, I have a question.
You're gone.
I have a question.
Please, on the chart, this last chart, there was an instant that the market gave something like 2 break of structures. The last chart that you just showed us, that you used for illustration.
This one, right?
Yes.
Okay, so which to break or structure?
After the market cleared out that liquidity, yes, I can see that high there.
Market
Yes.
structure shift, break or structure. Abi?
Yes.
Okay, so what's your question?
That pullback after the market structure shift. In the
Which pullback
context,
after the market structure shift?
I mean, after the market structure shift, the price gave us pullback before making the break of structure.
Yeah,
So in the context that this market has not gone far like this, won't that be regarded as liquidity?
yeah, you can get that as liquidity, but as you can see, that place have already reacted to the market mechanics that were here. So if I'm to use this place as liquidity, where should be my entry? That was why I said that this is an advanced stuff. You can see these 3 circles here. It means something. These 3 circles were the ones that made me to like say that okay, this place have already been covered. And beside, normally if I'm to without that one alone, all right, without that one alone, I already have this. Remember, liquidity, like I told you guys, liquidity is the most important. Now, where liquidity dey, now you wan use. Normally, I could have used this place as my liquidity, but after seeing this break construction, see the formation of a new liquidity, I go change. I'll jump, come here, mark out my new liquidity, and look for the point of interest closer to that liquidity. It means that this place have been feed or price don't want to use here yet, and thereby means that this place will be the next point that price most likely use. And after using it, push to the upside from there. All right.
Okay, sir.
Does that answer your question?
Yes.
All right. Anyone with any other question?
I have a question.
Yeah, go on.
It's regarding the liquidity now. You said one of the criteria of confirming a liquidity is that it must
I
hit
can't hear you properly.
75% or it must.
Can you hear me, Chief Mr. Emeka? Chief Mr. Emeka, please, we can't hear you properly.
Unequal. It's regarding where to play.
Yeah, go on.
Can you hear me?
Yeah, go on.
Okay. It's okay. The multiple pullbacks and how we count them as liquidity, how we validate them as liquidity. It's after every pullback is a liquidity. But then, how do we know the right pullback? Just like this last one you just illustrated now. When I go to the chart, I used to see multiple pullback, and then I'll be seeing set up on each and every pullback. I'll be seeing other liquidity on lower time frames. But then, the way you mark this you mark the first pullback, and then there were other pullbacks again, other pullbacks. where there
Yes,
are
there were
where
other
you can also
pullback.
you
There
can
were other
also
pullback, but I've already marked this one as my pullback, and I was waiting for the market patiently at this particular level. Nothing concerned me until this was it. God, these ones are just noise. They are just noise to me. Yes, all of them we owe. Take for instance, this was a pullback for this other block here. What happened? Price reacted to it and pushed to this level before it actually before it actually came back down. All right, it's just for you to know the right one to use. Look very well.
okay,
You can
okay.
say that there
Thank,
was not a there was no proper break of structure at this particular level. And for that, maybe not to even I'm not even bother look it on this side. I already have my setup here, so why should I be looking for one trade or the other at this particular level? No, I have my setup here already. All right. If
okay,
you have a setup, just
thank
be
you.
patient for the market. If you miss, you miss. There's nothing bad. There's still be many other opportunities later to actually catch that particular market. All right.
Thank you.
Does that answer your
All
question?
right.
Okay.
Yes.
Anyone with any other question regarding to this class? Oh,
No,
all right then. Answer no question. We'll end the class here. Good night, everyone.
Good night, sir.
okay, boss.